Hello, it's Robert Miner with Dynamic Traders Group with a short video for our YouTube subscribers and Twitter followers. We're going to take a look at a couple of markets. One of them I think has a specific trade opportunity this coming week. The other one is a great trading lesson from the last couple of weeks. So as you know, everything that I do and teach is practical trade strategies, how to make a specific trade decision and how to manage that trade. So we're going to be looking at that today, and with a couple of markets right up to date. So we're going to look at the gold market and Bitcoin as well. If you want to know a little bit more about how we're looking at the gold and Bitcoin, I think it was 2 or 3 weeks ago I did a video and I included both of those with the kind of longer term probable position of those markets. Well, let's take a look at some trade strategies and one trade that I think is coming up next week. Okay, let's get started. This is the gold weekly data, and gold's been unfolding pretty much as anticipated over the last few weeks. And the low that was made about 3 weeks ago, almost 4 weeks ago now, is probably a wave A. As I've explained in prior videos, this decline is impulsive, so it should not complete a corrective decline. Probably an A in Elliott Wave terms. There would be a corrective rally followed by another decline to test or exceed this low in the weeks ahead. So that weekly momentums are bullish, they're not overbought. That means the momentum cycle probably has another week or two to go before this corrective rally is complete, and then this bear trend continues. Let's just keep our eyes out when we get near the end of August. That week ending August 25th has a good possibility of completing this correction. So that's not a forecast or a prophecy. How we use that information is if gold happens to be sideways to down, net bearish, going into that second half of August, we're going to want to be very alert to the other technical positions for the potential to complete the higher time frame correction off of this September to May advance. And that's what we're focused on now, because once that correction is complete, then more than likely this bull trend will continue to well above the May high. So here's the daily data. It's the closing data. Our daily momentums are bearish. More than likely, there's 2 or 3 more days sideways to down before the bull trend continues. We'll take a look at intraday data in a minute. But what we call the wave B correction off this wave A low in early July is likely to continue at least to July 28th, and that's pretty close to the end of next week, and could be as late as August 11th. That's a 38 to 62% time retracement, and typically would reach about the 50% or more. This is all based on closes, by the way. So what we're looking at more than likely here would be the kind of roadmap that would be the ideal pattern structure over the next couple of weeks is in the next few days, probably around the middle to the end of next week, we'll have a minor corrective decline that will be complete, probably a little wave B of B in Elliott Wave terms, and then this daily momentums will make a bull reversal, and then gold will continue to be sideways to up into probably around early August or so to complete this corrective rally. Going back to the daily, or excuse me, the weekly, when this corrective rally is complete, we'd call that a wave B, and then sideways to down for several weeks, probably into the second half of August. Quick look at the 240-minute data. We look at the advance off of the June 29th low, just a beautiful Elliott Wave, 5-wave advance. That's, at least it's a strong possibility that that's the case. So we call that the smaller degree wave A, if indeed gold's going to be sideways to down for a few days, as the daily momentum cycle suggests, is that the ideal time to complete this wave B correction would be around July 25th, and that is next Tuesday through the following Monday. So more than likely to be make a low. This is just the ideal, around 50-62% retracement on price, 38-62% retracement in time. So around the middle to the end of next week would be the ideal time to complete this correction and then continue a bull trend. Again, it's not a forecast. Here's how I use it to make a trade decision, though, for instance, for gold, is that if gold is indeed sideways to down for 2 to 3 days and reaches the 50% retracement or less, and we get another rotation in that daily momentum cycle, that's going to be a setup to identify the end of this correction to participate on a continuation of the bull trend, at least more than likely. That would be one scenario from which we could take a specific trade, have a specific trade strategy. So look at that in the days ahead. That might be useful to you. There's a great trading lesson to be had from Bitcoin over the last few weeks. About 5 weeks ago, we had this tremendous spike up in Bitcoin to a new high. It looked like it was going to break out to new highs. Now, in our DT trade alerts, we had a trade wreck that got us in right about near this low, about 2 days after this low was actually made. So, boy, it's looking really great there the following week. But look what's happened over the past 4 weeks. Absolutely no follow-through to that. So not only that has it been sideways and no follow-through, and by the way, if there's not any follow-through the next week after you have a breakout like this, then that's just a glaring warning that something else is going on here other than demand for Bitcoin. So this was a news event, and there's nothing fundamental about it. So no follow-through those next 2 weeks. But look what happened in the meantime is that while this market was going sideways, the momentum cycle continued and reached it overbought after 2 or 3 weeks following that breakout. So our momentum cycles are actually more regular than price cycles. And the momentum cycle indicated that Bitcoin was about to roll over. So trading strategies wise, let me go to here's the lesson, by the way. So here's the daily close only data. And again, we had a recommendation some weeks ago and got long just about 2 days after this low, recognizing that Bitcoin was in a position to complete an A, B, C, D, E correction that happened to be around the 50% retracement. I'm not showing it there, but it was just this beautiful setup at the end of a correction. And what follows the end of a correction? Resumption of the trend prior to the correction to a new high, to above the April high. Well, that happened very quickly. But what didn't happen was the follow-through. So when the daily momentums reached overbought, by the way, you always do multiple unit trading, at least 2 units. So when 1 unit, we'll call this more or less the short-term trade. When the daily momentums reach their overbought, we just trail the stop and we exit on any day that the market closes lower. So we did that like just a couple, 3 days after this top. So we exited 1/2 the position, a really nice profit on half that position, anticipating that this little sideways sort of trading range was a correction, and that when the correction was complete, then this bull trend was going to continue. Well, we'll go back to the weekly real shortly, and there was no follow-through at all. So again, in the meantime, the weekly momentum cycle reached overbought. So when the weekly momentum cycle reaches overbought and there's been no impulsive advance, you want to get that stop really close to the market, because the market is telling you by its own action that more than likely this was just a news event. There's no real breakout, no real bull trend coming. And once this weekly momentum cycle rolls over, more than likely the market's going to roll over and be sideways to down for a few weeks. So we brought the stop up on the second half, right below this little swing low where this congestion was, got stopped out of it just last week on the daily close below that. So have exited both those long positions, the full set of the long positions, both units, right around in this area up here. So the market did not do what it appeared like it was going to do, like it was the beginning of a new bull trend that would continue much higher. So you have to listen to the market. You have to make decisions based on the market position day by day, and the market will usually tell you if there's buying power or selling power in there, if it's going to continue or not continue, based on the technical position of the time, price, pattern, and multiple time frame momentum. So it was again, it was a trade that was a nice profit overall, nowhere near what was anticipated. If again, this was a weekly low and a bull trend was going to continue well above that high, but the trade strategies locked in at least a reasonable profit for that period of time. Okay, my friends, that's it for today. If you'd like to be alerted to when we have other updates, as well as we have some more updates on our website, you can check out our Traders News tab on our website. Sign up for it. It's actually absolutely no cost, and we'll let you know whenever we have some updates that are free for you, all about practical trade strategies. And I hope you'll join our community. You might be interested in our DT reports. We update 3 times a week all the major markets. That's it for today. Everybody take care, be safe, and I'll be back with you in a week or two. Take care. Robert Miner, over and out for now.